This is London with Bitcoin Spike and VIP Trader. We are pre-market. New York going to open in T-1 minute. Hope you're doing well. We'll be looking this morning at NVDA, which is currently expressing a bit of a drop. In terms of the open, we're going to be covering NVIDIA, Tesla. In terms of Bitcoin as well, our favorite. I will say the following. This is a delayed stream. It's not intended whatsoever in terms of live trading. You understand this. You know this if you are a frequent trader with us, guys. You trade, you let us know how it works, but the 8 to 10 second delay is just going to be potentially crippling for you in the market. You understand that. Looking at what we're going to be opening in on, NVIDIA is currently looking to the downside. Okay, a big move down yesterday. Some Chinese regulation came through. Looking at the drop, boom, on NVIDIA into what specific levels. Let's look beyond. If we can match up, particularly looking at the 4 hour. Let's do this. Let's go to the 6 hourly. It's been very, very important. The 6 hourly time frame, equivalent preceding level here below, attempting to pick up at that preceding lateral level on the 6 hourly. Okay, that's the level that had been established yesterday as the pickup zone. So the buyers are retesting on NVIDIA on the 6 hourly potentially to pick back up and over. I'm going to take a look at the 30-minute right now on NVIDIA. Right after we look at the specifics, but the 30-minute level of support is attempting to hold as well. If we were to look at this patterning formation, that specific formation here is critical. In addition, we have a cross dynamic looking at a specific topping level formation that could be respected on that 30-minute with downside targets. So that is your crux this morning, as you're also looking at a fire sale line on our 30-minute. Pay attention, you guys have this. Okay, fire sale on the 30-minute is engaging along with the dynamics of the potential level of support reinforcement on the 30-minute. It's the bulls for the taking. If they want to try and pick up, the market overall is down. Okay, the market is down with not just NVIDIA with a strong drop to the downside. Opportunity to pick up yesterday paid well. What was the key consideration in terms of the daily? Yes, you guys had that down and under, and that 6 hourly or that daily is going to show that lateral attempt to pick up where there was good buying pressure yesterday. Absolutely, but the set underneath the specific 20 moving average on the daily for NVIDIA was a warning sign. You guys got that. Along with our red cap line on the daily, we did have some downside potential pressure, given that the bulls were, bears were actually in control. Bears were in control of that RSI stochastic and MACD. Lateral pickup, trading. It's a tight open. We agree that's a tight open in terms of the move to the downside. That was not tight, but looking at the 0.4, 0.5, if you were quick on the trigger, I don't want to quite call that yet in terms of trade op. 2 minutes into the trade session. Let's take a look at the 4 hourly. 4 hourly on Tesla as we look at the open. Okay, a nice really, guys, a nice drag or let's just say a power down here on this level. The 4 hourly is interesting because we have a confluence. If we were to look at the specific capital control line and the 20 moving average on the 4 hourly. It's a bearish dynamic on the 4 hourly, and we're looking at earnings today. So if we were to get some constricted price action today on Tesla, I would not be surprised. Earnings after the bell, be prepared. And again, this stream is not intended for you to trade live on. So in terms of guys, what type of advice or otherwise it is, you're 8 to 10 seconds behind. I'm going to remind you that it's not intended for live trading. We're going to assess the equities and look at the pattern formations, the diagnostics that we would come into, let's say just the appreciation of, as we were to look at just the opportunity to trade Bitcoin and equities, at least for the purposes of let's say exploring the technical dynamics in play to the extent that we can find correlations, accompanying patterns, or get more exposure to the critical elements of the market when Bitcoin decides to stall out a bit. Now, this is the dynamic in play. When you start to see, let's talk about this real quickly on Tesla. When you start to see, and actually let's go to the 15. I want to go to the 30 minutes on Tesla as well to take a look at just kind of the rare 30-minute. We've been hiding that. It can be a bit tricky. Lower pro line has picked up today on the 30-minute. So make sure that's on your chart, if you would, please, because I have realized that I've let that 30-minute out quite a bit. Looks like we could have some shorts engage on the 20 moving average pickup on Tesla. has done well. Let's see if we can see that hit coming into that 20 moving average, and if the bears on the 20 are going to be rewarded. There's the hit, and are they going to be rewarded? Are they going to be stopped out? We're going to pay attention, and just remember that 30-minute can be friend or foe. It is a standardized time frame, so you're seeing that flex, and it looks like the bears are trying to engage and just got stopped out as we see the power up over and through. Absolutely. So the 30-minute. Let's get back into the 15-minute and see how this is approaching on the 15-minute with some levels above. 30-minute is a time frame I haven't paid much attention to. What is the reason why? I typically will say it can be friend or foe, right? It can be helpful or it can be damaging. If you're looking at the 30-minute time frame, make sure it's somewhere when it gets into a rhythm. I think you'll agree with this if you trade frequently. When it gets into a rhythm, the 30-minute can be untouchable, okay? When it gets into a streak, it can be just really, really untouchable. I don't want to, if we start playing with the 30-minute, just understand it can push, guys. It can push you around in your trades until it becomes, and it's almost like a best kept secret, the 30 minutes. Certain times it will become so advantageous to consider the 30-minute that we have to explore it. But it's a great example this morning to say, yes, it's a key time frame, but it's also just potentially dangerous, right? Absolutely potentially dangerous. We know that. For those of you who picked up, congratulations on the drop this morning. Let's take a look at the specific. If we were to look at yesterday, and this is what we're on the 77-minute here, one of our favorite really productive time frames. Let's compare that with the specific hourly. If we were looking at the hourly, what have the bulls done on Tesla? They've recaptured, okay, they've recaptured price action up and over the 20 moving average. So that was a nice drop to pick up. I know certain ones of you have, certainly definitely have the impetus just to grab onto the specific drop on the open. Now you're seeing a reinforcement of the 30-minute. Let's see how much of a push up and over, depending upon how tight your stop loss was. This did engage and stop you out 0.6 to about a 0.25% move to the upside, depending upon how strictly engaged you were there. I do, guys, in terms of my approach, I prefer real tight stops. That's just me, real tight stops. Trade doesn't go my way, no problem. Can I still trade the over or under this line? Absolutely. So when I'm engaged in something and see something cut up and over, it doesn't mean cut, hit the button, out. No, it means my stops as I set them up are extremely tight. I want a precise key level entry here. Listen up, I want a precise key level entry here or it doesn't have my attention. What had my attention from yesterday? The specific perfect hit along the 20 moving average. That to me is a big money move. Why? Because it's perfect. It's literally precise, par excellence, guys. In terms of the specific move here, that 20 moving average, the perfect, just the perfected level, that highly precise entry on the 20 moving average that got my attention. Worth discussing a bit. Also cap line here. You'll see this specific move here. Worth discussing a bit. When you see a level come into conformance, or a time frame rather, come into conformance with a few highly precise levels, highly precise entries, long or short, we want to at least pay a little bit of attention. So when we wake up to the fact that, well, we had a perfect hit yesterday here on the 20 moving average, so we need to pay a little bit of attention to see if that 30-minute wants to get on the run. Absolutely. So that's the dynamic and that's the rationale in play. Assessing, well, we've had some dramatic opportunities, trade ops. We call them trade ops in terms of opportunities. That's it, guys. Looking at the trade opportunities with the increased volatility this week, it's been a nice week to be around. I don't want to just call it. Let's talk about Bitcoin real quickly on the 15-minute. We had the specific flat top resistance on the 200 weekly moving average. We're just straddled up barely above that 200 weekly moving average. Again, this level has engaged multiple times. I'm glad that we brought this to your attention without a doubt. You got it. Now, what do we have? That blow off top from earlier this week, that 10%, 13% really from the lower levels, moved to the upside. This specific level has engaged multiple times. If you're looking for flash trades versus looking for carry trades, I expect that you know the difference by now. And if you don't, listen to the old streams. We want you to listen to the old streams. And let me take a look at the chat real quickly. Say good morning. Looks like we're about 10 minutes into the session. what traded. First of all, the crypto traders who are up all night long and are VIP, they're not trading. I'll just tell you, they are asleep right now. That's okay. No problem, no problem. They're going to watch this later, which is really the intent of this. They'll watch this later. They'll pick up on the additional dynamics, the technical, any additional strategic, tactical advantages they can gain from looking at the pattern exposure while things are volatile. What are the expression, what are any new expressions or new techniques we're applying to our standard tactical approach in the market? That's really what the open gives us. Trade ops, sure. We love the volatility to the extent that you're capturing those consistently and proficiently. Guys, it's very exciting. That is why we're here in the markets. 2023 has been gangbusters. We've been excited to be a part of it. Looking at the lateral pickup, we did well. Let's say that on NVIDIA. Did we get is good enough or is good not enough? I think good was enough. Let's talk about it. In terms of redirecting attention just a minute on NVIDIA, let's look at that. I just like the 6 hourly. The 6 hourly has been important, okay, on NVIDIA and on Tesla. Taking a look at the 6 hourly, I want to compare it real quickly to the 4 hourly. Let me go ahead and get back on all of my indicators. Let me go ahead and right click, apply these indicators to all. There we go. I want to make sure that we're not in a distinct dynamic here. Let me pull across as we look at this. And we are, okay, we're in a confluence here. So we can look at the 4 hourly as well. More comfortable time frame for you to assess level of resistance. It came in at the specific preceding green buy line. We note that in terms of our specific fire index also came in at the specific, and we'll look at the lower time frames, but just note on this higher time frame, reinforcement of that lower band on pickup this morning. It was a great trade opportunity. Everybody agree from the open, pushed a bit, made you sweat 0.25%. That's not out of the realm of possibilities. Looking at the specifics, you may have garnered into that on the specific 30 minutes. In terms of whether or not you stopped out, you may decide, I'm going to let this 20 moving average push a bit, depending upon how tight your stops are. Okay, that's going to determine whether or not you're engaging potentially more capital. Why would that be? Because your risk profile is different on the specific trade. If you're looking at the amount that you're risking on the trade, right on. You're looking at the amount you're risking on the trade. If you have a looser stop loss, you're risking more on the trade. If you have a tighter stop loss, you're risking less on the trade, right? So looking at the dynamics in play, about a 1.5% from the open. If you grabbed it below at the absolute low on NVIDIA, we can call this first 10 minutes nicely done, looking at 1.76% maxed out. Nice move, not bad. In terms of the first 10 minutes, can we get something to provide us with that level of trade potential? That's fantastic. What did we hit into? Also was the pre-designated, and this is the fly in the ointment right now. This is the specific expansion. Is it simple routine here this morning? No. Did we get a good trade off of a preceding level of support, established support? Yes. Is it beyond the realm of contemplation to get back up to this level of resistance? I'll tell you this, if you trade these over, if you traded every single one of these patterns over the last 40 years just based on back testing in every market, what would you know? We would know you have a 72%, 75% chance, depending upon your internal play here, could be up to an 85% chance of getting up to the level of resistance. Okay, you're gonna have to look at your internal dynamics of what additional patterning is in play here, and upon breakout, if it's a 50% completion of said pattern, you could be looking at an 85+% return dynamic here. So if our top side is our target here, and I'll just mention this for the following reason. As we look at the 3-minute on NVIDIA, with some very difficult, potentially very difficult news coming out in the form of regulation, etc. Just note such that, well, we're fighting the tide. All of a sudden, the tide seems like it's turned in terms of the specifics on the regulation front, in terms of chips, China, etc. So, not sure what's going on there, but that is a turn of the tide. We agree, potentially. We'll see, you get a good look at their growth model in terms of their distribution and growth model. A lot of facets come into play for said chip maker, which we're a big fan of their products. We like NVIDIA. Let's take a look at what we had ongoing with this inverse head and shoulders. We had a compromised breakout. If you'll recall that, we certainly did. What was the compromised breakout? And this is very, very instrumental in terms of our framework. It's just if you were to go long, big time long up and over a rising wedge, this would be the case in point as to why I fuss and nearly, guys, why I fuss every time on a bearish breakout of a bullish pattern. We have an inverse head and shoulders. This is why I am who I am. This is just why I'll bring it up 9 times out of 10. You may kick yourself afterwards, but I'm going to try and kick you a little bit beforehand and be like, oh, this is just not what we want to look at, okay? So overall, that's the dynamic in play, rising wedge feature of a bullish breakout, not something you typically want to be oriented in. Long up and over that topside resistance. Just note such. If you're getting some flash trades in today, congratulations. Looking at that 30-minute again, and we did have an engagement, didn't we? We had an engagement on the specific fire sale line. You got it. The fire sale line on that 30-minute did pick up and is trying to pick up again in line with that preceding pickup zone yesterday. Light and easy morning, no problem, right, for NVIDIA. I tell you, yesterday was not light and easy. If you handled that volatility well yesterday, congratulations. I know you handled it well, and congratulations. It's supposed to be easy, right? It is not supposed to be easy. Just to let you know, this is not an easy, it's not easy to play into, a surprise regulation move. Not easy to play into quick changes in fundamentals, etc. Looking at pickup lines with a little bit of variability from one time frame to the next. Looking at a lateral pickup zone that pushes just a little, right? If we're going to look at this, yeah, okay, great. I've got a lateral pickup here to the left, and it's already pushed me just a little. Is it supposed to just be comfortable? It's supposed to just be an easy ride, no problem. That's not the market. That is not the market, and it attracts the right types of players, the right types of traders. That's what I've enjoyed over the years, is meeting some of the toughest, big-handed people in the business that I can imagine or that I know of or that are there. So it's nice to have that dynamic in play. Now, in terms of the pickup on the lateral, we'll just call this on a video. Okay, how tight are we going to get here? Is it a great pickup? Well, let's discuss. We're already, guys, in a tight zone of a 0.3, 0.4. So your lateral pickup has paid. It has paid. I know it seems like, but we want it to pay like it paid yesterday. You got it right. Looking at the 15-minute, what was the problem? It appears directly as if the problem in the 15-minute was the 20 moving average. That 15-minute's been so consistent. It's been so consistent. We agree? Absolutely. We always, I'm just going to say, have on our screen the 15-minute, noticing a little bit of that, the concentrated, nearly concentrated, highly precise moves that we can identify on the 30-minute. We'll bring that into the equation. I like to have it up because, again, I'll just say specific times, instances, you will see that the 30-minute just becomes on it. Guys, it gains that hot streak dynamic to it that you will be out of the loop if you're not paying attention to it. You know that. So identifying when, how, and where that 30-minute comes into play is critical. You know this. It really is. So that's some of the advanced diagnostics you can look into yourself that we enjoy being a part of on our own kind of technical regimen. In terms of the level of resistance, or what we say, routine. Level of resistance preceding, boom. Right now is a natural level of engagement as we look at the 15-minute on NVIDIA, preceding level of resistance, engaging as a potential level of support, trying to hold. Looking at the overall market, the NASDAQ would start to be a bit troublesome in terms of the dynamics. Before we get into the NASDAQ, let's just talk about Bitcoin on the 3-minute, looking to retest the 20 moving average. And I know that you have your trade mechanisms pop. They're good. You have your trade mechanisms in play, right? The question is not always what direction are we going. The question is how big of a move are we going to make in that direction. That is so frequently the case, and as you assess your trade interaction, the dynamics of your trade interaction, it's not difficult to say, well, the price is going to move this direction. The question is how much, right? It's not difficult to say, well, if I structure capital appropriately on Bitcoin, I should make some money long term. That shouldn't be the question. It's, yeah, but how much? And as you start to roll dice into higher risk equations, that's the question that gets people in trouble. You see this throttling on the specific 3 minute. You see the specific level of interaction. The question is, it's going to move. How much? And as you look at that how much question is going to be the determinative. Can you trade 0.04%? Bitcoin, we need you to move a little bit more than 0.04% on a level of interaction. We agree? So there are some ways to work around that. There are some procedures to put into play as you're looking at trying to trade a $12 difference on Bitcoin. What is the answer that we would look at? Well, the answer that we would look at immediately would be, let's look at the open. Let's look at what's moving and shaking in equities. Where's the volatility? And we're going to find it. We're going to have to chase it down, guys. We're going to put a task force together and find the volatility in the market if we have to, right? That's the idea as we were to look at the dynamics of play. Recall on, it just is, guys. As you're looking at something, you know this, and now Bitcoin will surprise you. Don't ever take your eyes fully off of Bitcoin. But when we have a 10 or 20 minute specific opportunity to focus on some real nice levels of volatility, we're going to do it. Let's get the practicum in. Let's gain that strategic advantage that we're looking for in terms of the specific and correlated. You have to say it at this point, we are correlated on these equities with Bitcoin. It would not make any sense for us not to pay attention to them, without a doubt. And a lot of opportunity there. What we're going to do is draw this line here. Okay, we're going to draw this line here for Tesla. We have the bottom line, we have the top line on the daily. We're going to draw this line as a pickup zone. We're going to draw this line as a pickup zone. And we're just going to say this has been a beautiful ride. In terms of preparation for the unknown, okay, the unknown. Yesterday on NVDA was an unknown. If you traded on that unknown, okay, you could have gotten in some trouble. We know that. So looking at that dynamic in terms of the unknown that's incoming this afternoon for Tesla earnings, if you're in the unknown, approach it with care and consideration. Look at your macro determinatives, of course. Maybe your 4-hour, your daily. What does your RSI stochastic MACD say about where you're at on the daily? Okay. If you want to evaluate that in terms of preceding earnings, taking a look at, okay, overall we've got hypothetically a 7 or 8 out of 10 chance of just of it being, yes, technically relevant or fundamentally relevant, but really technically 7 out of 10 times we don't see much of a surprise, right? Have you made those assessments? Those are important assessments to make as you look at carrying in positions or otherwise in your trades. Looking at this, we can call it a rising wedge as we were to explore this function on Tesla on the 5-minute, boom, boom, you got it. Looking at that feature, we see these specific features. I don't want to invert this chart. I'll encourage you at some point on the 5-minute, invert this chart and look at what you see price doing. Take a look at what you see price doing on an inverted level, where you just invert the specific pattern dynamics in play. You may get a little bit of a different view. Now, we have the option here of either approach is going to work for, and it's a well-suited approach for the descending wedge or for the ascending, guys, or let's say the head and shoulders or the descending wedge really is going to be the line in the sand between the bulls on the 5-minute. If we look at the 5-minute, this is some constricted price action as we approach into the particular triangulation. As we look at the 5-minute, what are we looking at? We are looking at the bulls having, okay, their pattern that they would choose here in terms of this specific descending wedge, and the bears just screaming, we want this head and shoulders. We noted, did we not? We did note upon the specific left shoulder head, this right shoulder, this was already head and shoulders. You will recall such. And what do we say? Well, we didn't like this light right shoulder here. Upon breach and recovery, we said the bears are going to be looking for a higher element to become more constructively symmetrical with that left shoulder, the head, and then that right shoulder to enforce more dynamically, let's just say a more ideally conformant proper right shoulder for that head and shoulders pattern. So bears have gotten what they want. Bulls have gotten what they want in terms of a well-constructed pattern for each to have an expectation. And the bulls do have the saving grace of, if and upon the specific, the specific trajectory to the downside and the failed descending wedge, we're going to have a target right here at that apex. So that's part of a demand equation with the understanding that Tesla can be brutal once she gets going. That's one of the reasons we like her, because she will get going, and she will keep going. And if you're prepared to take care of the dynamic, take advantage of the dynamic, that she will get going, she will keep going, and that's just how she goes. It's a nice, guys, it's nice. It's a nice feature of Tesla. So a little bit of a standstill, about down 0.91. Let's take a look at NVIDIA. Pushing down. I'm going to focus on a higher time frame just with NVIDIA, and the fact that this lateral pickup is just a lateral pickup zone today. So has it paid? Yeah, it's paid twice. We'll note that it's paid twice. Hugely, guys, not huge moves. Big move to the downside. That Chinese, the Chinese restrictions are just noted in terms of the frustration of the price action. It just is what it is. Looking at the specifics, this key level was hit precedingly, and what a great challenge to the market as we look at a potential green buy line on the weekly again. Note that this bottom here was on NVIDIA, the specific green buy line in this zone, okay, in this zone here. That was a move of over 15% maximized. That was a nice grab. Very nice grab as we look at price action below that 20 moving average. It's a level that we're not comfortable with as bulls. We understand it can push. I don't want to say everything a double-edged sword. What I will say is, or ambiguous whatsoever, let the indicator speak for itself. The kernel calculation, green buy line on the weekly gave you 15%, maxed, nicely done. What's been reinforced as well for a long time here. If we were to look at the number of days here, 112 days, bam, up and across the top, you've got what? You have got a capital control line over the last 112 days that has, on a bearish basis, enforced itself on the weekly. So you've had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks out of 112 days that you could have said, I want to short NVIDIA. It's one thing to say it, it's another thing to have the line on your screen. Okay, to have the line on your screen to say, I've had, say, 10 chances out of the last 3 to 4 months to short into level, said level. Okay, if you want to combine in with a top level scale-in feature that you could look at for your specific top side Bollinger Band. Now, it may seem as if I have a, let me say this, it may seem as if, and what you may not understand, this is very important what I'll say right now. It may seem as if, well, I'm bullish sometimes and then I'm bearish sometimes. So I don't know whether or not to be bullish or bearish on NVIDIA. To the contrary, traders that I deal with and have dealt with, and the own dynamic really that is maybe the most difficult dynamic to overcome in your trade game is that you're going to be bullish or you're going to be bearish. So when you hear a distinction or not, or you hear a preference or a statement that you'll agree with or kind of turns your stomach or kind of is affrontive towards you or not, it's accommodating towards the fact that it's either bullish, well, now it seems bearish, or now, I'll tell you this, you have a predisposition in the market. Guys, I don't want to say 9 out of 10, I want to say 99 out of 100 traders really have a predisposition in the market. And so when I'll say something that seems more bearish, or how you could have captured the specific bearish dynamics in a trade, on a trade chart or on an asset, who's going to connect with the bearish comment? A trader. Is it going to be you? If you have a bullish disposition, and always have, and that's how you operate in the market in terms of pushing up, it's not going to connect with you. So don't fault the messenger here in terms of expressing that dynamic of what was possible, what was achievable from a bearish dynamic, what was possible, what was achievable from the bullish dynamic. They're two separate frames of thought. If you're learning to incorporate both of said dynamics, even in terms of a hedge potential, congratulations. If you're stretching yourself, if you're mastering that dynamic yourself, that is going to be something that you're going to continue to do successfully. I'm going to say successfully with the right amount of hard work into the equation. Let's take one look here at this equation on the weekly. What do you all see on the weekly? Well, we see a conformant pattern that we don't mind. We see something that we can take advantage of, or at least define in terms of a specific potential bull pennant, guys. We want to call it a bull pennant. It's not going to be perfectly lined out on NVIDIA. It is going to have a potential expression. If you take a look at the, hate to say this, get to say it, some decent products coming out from Meta. So take a look at the Meta chart. Okay, take a look at the Meta chart just real quickly when you have some spare time that you may not care about at all. Take a look at the Meta chart. Potential for a bit of a flag structure here upon a potential breakdown. Now, we have all types of room on the weekly to get through this. We just picked up our 15% at a green buy line. We're about to test that level again. So it's not this is not time for the coach to come in and say the game's over. We got one play left. It's a Hail Mary. No, guys. No, it's the game's over, guys. We're not doing that. But what do you have on the weekly? A level of support engaging along with that green buy line. So amidst the bad news, if we were to fall out in terms of that Chinese regulation on chips, et cetera, I think we've heard that story before, haven't we? We've heard that story before. But as we're pushing below, looking at lower levels of consideration in terms of your entries, you will note such. These are the dynamics in play, and we would expect the bull pennant to flag, a specific flag catch on this with the complication of two complications. What are they? Let's talk about it real quickly. Now, we note complications for the instances when we have no complications. When we have no complications, we note that as a level of agreement between the traders as to the different time frames between the bulls and the bears, what's really going on. Bit of a diamond pattern formation here, we concur. Bit of a topping formation here on the weekly, we concur. So to the extent that we are looking at a real solid, or if we want to call this a topping formation, any type of a head and shoulders, etc., to the extent that we will discuss multiple notions or multiple dynamics in play, we're just going to outline the situations where we have conformance or where we don't have conformance. When we have conformance versus when we don't have conformance, we're just going to note such for the purposes of saying, well, now we have confirmation in those instances when we do. When we don't, we're going to discuss it. And it may take 10 or 20 minutes or 1 hour, 2 hours to discuss all these times where we have competing patterns. Okay, what's the benefit of discussing all the times where we have competing patterns? What's the benefit? The benefit is that we are able to distinguish thereby when we are looking at a situation where it requires no discussion. We're all firing in the right direction. We have every pattern conformant bullish. We have every indicator conformant bullish. We have every time frame conforming bullish. Bam, bam, down the row, every time frame, down the row, every indicator, down the row, every single pattern is bullish, 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 or every single time frame is bearish. Every single indicator is bearish. Every single pattern is bearish. Then we have conformance, we have confirmation, we have all the traders literally on every time frame agreeing, right? We don't have that tug of war ongoing. We agree, so this is why we delve into, and this is a good thing too, we delve into the technicals. We care about the market enough and our participation in the market enough that we delve into the technicals, okay? Stringently enough, adequately enough, with enough care and attention to where when we have the all systems go on every indicator, every time frame, and every pattern, when we have that all systems go, we don't have to say anything. It's done. We know it. We're there. The market shows us. We can perform the analysis and take advantage of those all systems go moments without the guys surrounding hours of information that are required, or hours of discussion that could be required. That element's not there. And we know it and we can assess it. Now, you're going to run into that on lower time frames. You're going to run into that on the micro trades where you know we've got a higher degree of confluence. It's not the big daily pattern that's playing out with no interference whatsoever on any other indicators or any other time frames. But you've got that level of confluence agreement, let's say on a 15-second or 30-second time frame. Somehow it's boiled down to where the specific trade you have that you're looking at right now is one of those moments, right? And I'm not talking about on the screen, but you'll note that in your lower time frames. You'll note that as you do and digest, guys, as you do the analytics and digest the trade opportunities on a more complicated basis, it's the ability to process the technicals. Is it supposed to be easy? No, but when you find that groove, okay, when you find that, guys, it's an objectively assessed condition. It's not a subjective, I think, I believe, I want, none of that. None of that. It's an objectively black or white, on or off. Guys, the switch is up or down. It's a cutoff valve that, well, it's closed, it's open. It's objective. You've got it or you don't. It's not maybe I want it here. No. It's something that over the time as you progress in terms of your technicals, you're going to be able to assess. And what we like are the bigger patterns. We like the larger the pattern, the larger the expected move. So we like that confluence on those bigger time frames. And no problems with technicals, with any indicators, with any other time frames. That's when we're ready to rock and roll. But you'll find on smaller time frames levels of confluence, levels of agreement that apply to, well, just this time frame. Everything's perfect. You'll start to branch out to a little bit of a higher time frame. Say, well, that time frame is in agreement. Now, the other time frame, let's say the 4 hourly is in agreement. The 30-minute is off, but God, the 30 minutes off quite frequently. I don't even trust the 30-minute. Right? The 8 hourly is irrelevant for the reasons it's irrelevant. Maybe the hourly is looking like it's about to come into conformance. And the daily's been strong the last couple of weeks. Okay, so as you're parsing through this information and you're looking at it and you're distilling the smaller trade, right, into as opposed to those larger trades, just be aware of what your ultimate goal is. It's not stress. It's not. It's the ability to interact technically with the market and discern those trading opportunities when they present themselves on the smaller time frames, starting with the smaller time frames. Looking at your agreement here, your stochastics is negative, that red bar on the top. Okay, we have a potential long here on the 6 hourly. 6 hourly, difficult to say we're on a directed course without showing you some additional features here. Momentum on the 6 hourly has been what? It's been negative, right? It's been going down. It's paid you well in addition to our specific capital control line. So if you're looking for a pickup, right? We've got the lateral pickup now. It's a catch with a what? With a stop. It paid twice this morning. We agree? Yes. Tenuous line here, a little bit shaky. You know, we've got the level engaging 15-minute, etc. on our fire and ice. Not easy. Not supposed to be easy. It's supposed to be worthwhile, and nothing that is easy is worthwhile. We know this. So I'm encouraging you today to pick up and to just make sure your thought is structured appropriately around the challenge of deciding, discerning, and using your mental, guys, just let's say your intelligence, using your intelligence to your advantage in the market. You're a very, very, very intelligent group. And so to the extent that you're using your intelligence, make sure that you understand, you know this, hey, Venus, hey, Luke is in the house. What's up, Luke? Let me say, Venus, nice to see you. Nice to see you. Good morning. Always nice to see you. And Luke, nice talk this morning. Hope you're doing well, boss. What's going on? Luke from Canada in the house. My man. What's up, Luke? Bam. Nice to see you. So as we discuss the complications, as we discuss because what is it that we're getting at? If everything is a catch-22, it's all a double-edged sword. No. The issue is that as you further refine your technical skill set, your acumen in the market, your ability to process and digest, and Luke, we've been there. You know when all systems are go, you know how this works. You recall bull flag after bull flag after bull flag. I mean, we could just print it up, right? Big time. So, and these, in terms of the levels of complication that we're adding, what we're adding is simplicity. And we can say this to a big degree as we advance our understanding of the technicals. We're really adding this huge level of simplicity. As we go through all the patterns, as you look at these specific charts, and it's like, what are all these lines? What are all these additional tactics? What we're doing is we're simplifying the game. When it is less complicated, we are in a simplified state. And that's where, you guys know this, you'll look back, and I know this for a fact, and this is the double-edged sword. You'll look back at, as we look at NVDA, at that lateral pickup. You will look back at your biggest trade opportunities throughout the year. And you'll know two things distinctly. Hopefully, a former, not a latter. A former will be, man, those are the types of trades we need to hit, and I need that type of a trade opportunity. You'll know that when you trade the specific trade. You got it. Now, when you know that, hopefully you don't know the latter issue, which is, God, I didn't trade it well. Okay? Now, you're going to know, I guarantee you're going to know when you get the right trades, like, God, that's the type of trade we need. I'm hoping that we eliminate that secondary function that the tail edge of that sword is a mean one. It's got a bad bite on it that, God, I didn't trade that one right. So it's rare. The trade is rare. It's the type of trade I want, and God, I didn't trade it right. So the work we're doing now with the advanced technical approach is to ensure, guys, yes, simplify the equation. Let's get all this technical out. And you're going to also, this is the icing on the cake for VIP. This is what we're going to accomplish. Whether or not you want it, we're going to accomplish it. It is the following, that those oh so rare moments, those oh so rare trades that used to just be, the bull flag. We got another one. We got another bull flag. We want to recreate the number of really advantageous sought after trades. Okay? Not just bull flags. No, we have some other patterns in play. We have some other dynamics and tactics that we can throw at this market. So while we're doing that, pay attention, you know this, while we're doing, okay, while we're increasing the number of those trades that we really want to go after, what's the fact? They're just a little bit more technically oriented. There's a little bit different of an approach that we have to take, because some of these are a little bit more highly technical. But therein we're identifying which ones of those are those highly sought after perfect trades. Bam. Right? And you're going to get into the same dynamic that you had potentially. This is expanding your trade game. Looking at expanding all of our trade game. It's fantastic, guys. Looking at the dynamics in play. Well, I used to just hunt down bull flags. Okay, good. Those were big trades, right? Good. To the point of, well, now I'm looking for highly precise entries. Oh, you're looking for highly precise entries? Man, you ought to see this one yesterday. I mean, you ought to have seen this highly precise entry yesterday. It was perfect. You see how last year you were looking for bull flags. Now on Bitcoin, on the 3 minute, whatever time frame you're on, I mean, it was a perfect entry. You're going to get the understanding that this is your new bull flag. Boom. So when I talk about precise laser guided, this is a big trade. When I see a conformance here, bam, bam, and I see a move for 1.7%, that's the dynamic that we're getting into. So as we develop ourselves technically, as we look into and reframe what the technicals are telling us, it's not all a hunt for the next coin that's going to pop, guys, asset that's going to rocket. It's not the dumb money approach. We are a highly proficiently, technically oriented group. I'll put us up against anybody, any shop. Some shops have like 80 PhDs, maybe a little difficult. I'd like to discuss on the sidelines with them beforehand what they've been studying, what they've been producing. Not a joke. All right, but we're highly technically proficient. So this is your bull flag. Boom. On Bitcoin, on the 3-minute. Bam. What does this allow you? This allows you to potentially, on a hypothetical, theoretical level, but very actual, guys, in terms of real actuality here, that's a big trade. Why? Because it's perfect. It's perfect. It is exactly on the 200 weekly moving average, exactly the level we've been looking at. And there is an opportunity for an entry with a high degree of margin, with a tight stop loss, i.e. less risk. And look at it pay. Boom. That is money. And if you don't look at that trade right here as money, reframe what you're looking for. As you look and you find yourself looking through your charts, well, I'm looking for the next bull flag. I'm looking for the next hot coin. No, not the next hot coin that you can't even invest enough in because it's an illiquid, illegitimate issue. Depending on who you talk to, fact. If anyone thinks it's illegitimate, question it. Is this illegitimate? No. Is this a nice trade op? You better believe it. Boom, boom. That's beautiful, guys. So restructure in as we technically are advancing our trade game here. Pay attention to the technicals. Continue to reinforce the dynamics that advance your understanding of the market and how to participate in them. Okay? And it's not that, well, we can turn any market into a bull market. We can learn to operate and increase those numbers of sought-after trades as we expand the dynamics of those sought-after trades, as we expand the number, rather, and the dynamics of those sought-after trades. Just understand the technicals are going to be a little bit more, guys, a little bit more relevant. We agree? That's a good talk with a very intelligent, guys, very intelligent crew, huh? We concur, huh? That's good stuff right there. Good stuff right there. Let's take a look real quickly at Tesla. What is she doing? Well, she is pushing on the and picking up on barely, huh? We've got a problem here. As you look at this chart, what is it? What's your problem? What's your problem right here? What do you see as the problem on the hourly for Tesla? Everybody gets it. What have we had? A downside target. Same as yesterday, nearly. Why do we have a downside target? If we go bullish over, bearish under, that's a challenge in and of itself. To execute bullish over, bearish under on a 20 moving average. We got to get that down. People don't talk about that. Guys, people don't talk about that. Have you heard anybody talk about that? It's actually a challenge. To go bullish over, bearish under, you've got to execute your trades. It'll push you around. You understand this. When's the last time you tried to, when you were on a specific line, when you were on a line and you were looking at the price action over or under, say a 20 moving average or a cap line, when is the last time that you literally sat there and tried to execute or did execute bullish over, bearish under, long over, short under? When? When? It's one thing to say it. If you're not trying to execute it, it's not going to just find its way into your pocket in the form of executed trades. It's not. You've got to know how to execute it. You think it's just easy? No, or else everybody would be doing it. Nothing easy is worthwhile. As we understand our trade game, the approach, reason for any level of, just call it a sophistication. Is it a complication? No, it's a sophistication. It's a simplification, right? In that any complication really is eliminating those scenarios where we're not ideally placed in the market. We want to be ideally placed in the market. We want to have all systems go. When we're there, hey, nothing could be simpler. Nothing could be simpler. You got that right. So taking a look parallel, I want to do this, sorry about that, but we do have a level of interest, certainly, at that carry down feature. Now on the lines, you're going to have some differentiated patterns here. You got it. So looking at a potential pickup, where are we at? Target to the downside. You think bears want that bottom line? You betcha. What are we seeing? Just a bit of a tug of war here on the specific fire and ice lower pro line. This is the easy stuff. This is the easy stuff. We agree? Yeah, big time. Some things we make easy. It's a good thing, right? So that's your key level of consideration with a bit of a target to the downside. Orders parked below here, sure. Orders engaging now. That's a lower pro line in the hourly, sure. We concur. We just did. Did it trade? It just did. Let's take a look at this. 0.4, 0.5, nicely done. Flash trade, certainly. Understanding the dynamic involved, you got it. Still have a technical downside target? Yes, with one caveat being what? Typically, you're going to get to the 50% of the target about 70% of the time. You're going to get to the full target about 50% of the time, based on the number of crossovers. You're 50-50 on crossovers, unless you just want like 50% of the move between here and here. Noted, noted. That's not in the New York Institute of Finance. We determined that. Copy? Now, small, nice trade. Push a little bit? Yes. Orders get picked up here? No. Dang it. You wanted them, huh? It's okay. Being prepared and structured to operate at lower levels is part of this market, period. If you don't appreciate the fact that being ready to engage yourself, okay, structurally in the market, if you're not approaching the market from that standpoint and you're an all-in kind of trader, you're going to be all in and then you're going to be what? All out. You'll be all in and all out. Anybody who says, I'm all in, we're all in, yeah. If you traded that way, you'd be all in and you'd be all out. Period. Period. That's the wrong mentality, guys. Do you know this? If you're all in, what are you going to be? You're going to be all out. Bottom line. We had this dynamic express itself recently, didn't we, in terms of the topping formation and the measurement to the downside. That was on NVDA yesterday, which traded perfectly. Review the charts in the back, VIP, big time, big time. In terms of the move, boom, straight down to the 100% target. Review that, please. Take a look at yesterday's chart, please. Kindly requested. It is a near picture perfect replay of this specific re-hit after a real power back up and through into our 20 moving average on the 3-minute with a completion to the downside. Review, if you would kindly. This is Tesla. Tesla's tricky on the specific, can be very tricky on the recoup moves. We agree? Big time. She doesn't care about volume. She doesn't care about your, she doesn't care about much at all, does she? Sometimes. When she gets going, she gets going. So seeing this specific move, you have to look at your NVIDIA chart posted yesterday in the back. Take a look at it. See the similarity here in terms of the function, the aggression down to that level of completion. We'll say that maximum completion rather, to that 100%. Anytime we're dealing with a potential expanding volatility equation, we love them, we want to find them, we want to trade them, you got it. This is another dynamic to put into the mix where we've talked about the specific parallel channel carried ups, carried downs in the market, limiting the bulls to the upside or the parallel functions along the top that could reinforce the bulls and provide a hurdle to the bears. As we talk about the specifics herein, we will talk about the internal dynamics of any specific volatility equation. And as we discuss these internal dynamics of any volatility equation, what we're adding to the mix today, while you're working on identifying them, the number one producing pattern in the market, while you're working on what we're looking at, what we're looking for, while you're working on identifying them, we have structured in some parallel channel dynamics to be on the lookout for. And now, of course, I'm going to add into the equation the potential for, and we always do this, what's the topping formation? We have a lead in, great. What's our topping formation look like? We have hit 1, 2, 3, 4. Perfect, it's what we want. We want 2 hits on each specific level. Support and resistance. We want the handoff, bulls to bears, to bulls to bears. We want to identify 2 points with, we need essentially a handoff at every level. We agree? You got it. Within the channel expression dynamic. Within the channel expression dynamic, okay? We want to identify as well any additional patterns that can express themselves or give us some pickups that may not be right along levels of enforcement that may not be along this trail edge maximum consideration in terms of the value orientation that we have. We agree? Well stated. Good time to summarize up. You got it. Nice action. We concur. We concur. Good job, guys. In terms of the open, we'll just call that into almost an hour into the trade game, looking at that parallel pickup, lateral pickup here. Traded once, traded twice, agreed on NVIDIA. Tesla on the open. Let's just say we just caught a, on the open, what'd you do, Tesla? I got to rewind real quickly. I want to see what you do on the open. Yeah, nice rebound on the open, boom, with a nice re-hit at the level that we just noted. We concur. You'll see the lateral pickup here after the drop down, nice rebound right on the open, boom. Trade opportunity, boom, to the upside. Smaller lateral pickup, yes. Descending triangle, you bet it. We've tried to stay away from the lower time frames. That's okay today, just for a minute. Looking at these dynamics, yeah, we've got a recovery with a potential blackjack to the upside, right? And what are we going to be cognizant of? Well, we're going to be cognizant of all of our indicators, of all of our time frames, and we're just going to be cognizant of the fact that this technically has downside targets. And this would be a breach into another discussion. Well, what if we were to take, though, just for purpose of the discussion, would anybody be along this 100%? You know it, right? So you didn't get that bottom line support pickup. Yesterday it was in the context of when we discussed that midline function, the midline function and how it can be associated with the parallel channels, carry up or carry down, how it can be, where did you go? Where did you go? There we go. How it could also be expressive of a pitch fan dynamic. You don't need to draw 15 things on your chart. You don't. You just don't. Understanding the general principles involved, the internal patterning framework here, and what we're ideally looking for is a maximum value consideration on any volatility expression. Show me a macro chart of a daily with a level of support pickup here, which was what? Which was Tesla. Show it to me. Are we going to catch it? Come on, guys. Come on, guys. You know we're going to catch it. Fact, we have to. It's the volatility equation in play. This pickup, boom, right in and along this level. This expression, bam. I can draw it with whatever we want to draw it with. This is a quick and easy. That expression, yeah, we want to get to that maximum value area. And what was happening? Everyone was giving up on Tesla. You could feel it. The price is pouring down to what? To your perfect entry. Perfect entry. That's the macro. So show it to me on the macro, show it to me on the micro. That's what I'm looking for. That's why I'm in the market. I want that maximum value consideration. Work on your micro. Let it come in naturally and smooth and simple on your macro. Work on your micro. Let it come in smoothly like that on your macro. This is London with Bitcoin Spike at VIP Trader. I'm going to let you all dig into the market and your trades. Congratulations on a good open. A couple of nice trades, just quick rebound trades. No big deal. Now we're in the thick of it. Hey, now we're in the thick of it, trying to pop up and over on a blackjack. Just having a discussion on blackjack. Somebody overseas. Shout out. Oh, Big V, what's up? V for victory. We'll say, I don't want to mention the name there. That's okay. Just having a discussion on blackjack overseas. Quick dev work, guys. No big deal. Double bottom, single pass through. It's what we like to be a part of. You got it right. Big time. So, hope all is well. We will talk to you soon. Go get them, guys. Do we have a target to the upside? Do we have a target to the downside? We're going up? We're going down? What's the first question? Do we have a target to the upside? Do we have a target to the downside? Take this on in the 1 minute. Do we have a target to the upside? I know we recovered. I know we shot back to the preceding level of support. I know that. That's not what I'm asking. Do we have a target to the upside? Do we have a target to the downside? If you just thought, of course we have a target to the upside, it's level of resistance. Okay. All right. But do we have a target to the upside? Do we have a target to the upside? You guys draw your charts out. Look for your targets to the upside and the downside. Remember, any target to the upside or the downside requires a what? A pattern to get you to your target. Make sure you're seeing and see things become more simple if you can master those technicals. including what's going on right now. Including what's going on right now. We've drawn way too many of these guys. We've done way too much homework on these, without a doubt. So, and in the context thereof, I want to dig. We'll be here all day if I dig into the lower time frames right now. We know this. Huh? It's a matter of absolute fact. We know this. Looking at the framework, it will just be here all day. It's one of those days I can't be here all day. We have some meetings incoming here at HQ, so I need to be prepared for those fully. As you dig into your micro, let your trades do the talking. How about that? Let your trades do the talking. And I know, guys, it's going to be great to have that conversation, if and when we do. So just get after it. This is London, looking at a potential lateral pickup here after a breakdown. Where are we at overall? Let's look at the percentage overall in terms of 1.7 to the downside, looking at a 2.8% move for NVIDIA versus Tesla. And what would we say in terms of blackjack? What needs to be done? We need to break up, out, and over this level of resistance. We concur? Indeed. Okay? So if you're powering into resistance at any level, be prepared. If you're powering into resistance at any level, be prepared. Bottom line, we agree? When we talk about those parallel channels to the upside, to the downside, what do we talk about? The need to break those channels right to the upside in order for bulls to move up. Take a look at your parallel channel dynamic here. Swing trader paradise, you got that right. Where are orders stacked? You got it. Targets to the downside? Yes. Targets to the upside? Sure. We concur, huh? Where do you want to hit this target? This is the worst thing in the world to bring to your attention. Where do you want to hit this target? Well, most people get really excited when you get really close, and it's, well, we get the target, we're going to hit the target. I'm getting in now, we're going to hit the target. You haven't seen these targets hit back from way below. I'm talking about you hit a target. We're prepared to leave any target behind, but what's the consideration here? I mean, we hit this target. Did you see that? We went all the way down here. Boom. I mean, you see this level of support line here? You got it right, huh? I mean, I'm trading an expansion here. I'm trading a broadening expansion here on Tesla. Oh yeah, I want to get down into this. I want to get below this. Then I want to recover back up into it. So if you're on the micro, you're looking for a 0.5% move, or a, what is that, it'd be about a full point there actually from where we are now. But looking at this, the best trades come from hitting targets from further away. Yeah, you hit those targets from further away, you're going to be happy. You're going to be happy. That's what it's all about. So, a bit of a challenge. Good challenge. We agree? Yes. And in the context here of, what do we have? Bulls assessing Tesla on a potential bullishly constructed dynamic descending wedge. It's just one of those days. She's going to pull me into this. I don't want to do it. Huh? I can't do it. We have meetings. I got to roll in terms of meetings, etc. I'm going to encourage you never to be overexposed to any higher price. You know that. I'm going to encourage you to look at your targets to the downside. Do you have any? We've done this for a while. She played quite well along with the specific order dynamics in play, didn't she? She did. She played quite well with the level pickups, but she also got aggressive. Tesla. At the descending triangle levels of engagement, 23.6 engaged, yes. She gave an opportunity to 38.2, 50, golden pocket, 786, 86, and the full completion is ideally where we'd like to get. Bottom line, ideally we'd like to get down to that full completion is the bottom line for a value-oriented pickup. Just, it is what it is in terms of the pattern formation and the dynamics. It is what it is. Do we have an upside target? Yes, we do. Note such. Do we have any downside targets? A target to the upside, target to the downside? Assess such fully. What do we have going on down here? Right? And I want to stay, want to chat, want to get into all the good stuff, right? As we were going to look at preceding flat top resistance. Yep. Okay. So if you want to go up, what are you going to ask yourself? We have a target to the upside. I'm going to ask you, do you have a target to the downside? Inevitably, when someone asks me, well, do you think we're going up, or are we going up or down? And inevitably, people who've spent time around me, you know, I tell you, I ask you, do we have targets to the upside? Do we have targets to the downside? Where are we in relation to those targets? What are the patterns in play immediately that are in relation to those targets? Do we agree? Then what are the probabilities in line with the completion of the pattern, completion of price to the specific targets, fractional completion based on the immediately relevant pattern? We agree? Yes, we agree. Do we have targets to the upside? Do we have targets to the downside? Okay? That's going to be your determinative. Are we going up or are we going down? Busted blackjack? Yeah. Yes. We want to call a return a return. Let's go ahead and call a return. Yes. In terms of a busted descending triangle with the play out potential to the downside. A real blackjack move, as we know, is not just a return to function, but it's really going to be the breakout up and over with some momentum. Keep your eye on your momentum. Okay. Keep your eye on your momentum. And where are we at pushing on that 6 hourly, lower standard deviation? We concur? So the hourly traded, she did, the hourly traded. And what's the solution here for the bears? Well, the solution is I just got my downside target hit. See, because I was short, we crossed under the 20 moving average. So that was the problem as we were looking at it. You got it right. Let's see what we got.
Alert 4 hours pro lower line.
Bitcoin on pro lower line. Nice to see such. So as you assess your involvement in the markets, just make sure that you are continually aware of your upside, your downside risk. Your fear is somebody else's nice move as you're seeing this. And just, guys, we're going to look at, for instance, as we back out here, what's the momentum on Tesla? We have red. We have a bit of a green misnomer, 1 or 2. The only thing on Tesla that we really have of repute would be the daily momentum, which continues to try and surface to the top. But you've been red, mostly red on all of your time frames here on Tesla. We're just going to note that in terms of momentum, and I brought these to the foray because Tesla got a little bit aggressive. What are we trying to hold the weekly on NVIDIA? Right, we're watching that green buy line. You got it. Some flash trade opportunities this morning. Congratulations to everybody who traded. Few parallel guys, lateral pickups, and let's just continue to do all that we do in VIP. 30-second on NVIDIA looks interesting, doesn't it? Yep, looks like we've got a potential pickup zone and just a real, if you want to call that a pickup zone versus a descending triangulation. That's going to be tough to just say we're outright bullish on the pickup. It is a level of support that's engaging. Just a lot of downward pressure given the fact of the, and not to say it's not going to engage, it's already engaged now. That level of support's already engaged technically for a trade technically. It's just a difficult line as you look at any flat bottom supports. They're supports until they're not support. You know this. A lateral line is support until it's not support. Can you get even a small candle set on a smaller time frame under? You don't need to wait for a 4 hourly or 1 hourly all the time, but can you get at least a nice candle set and some momentum looking below a level of support? Yeah. So to the extent that it's a flash trade opportunity, yes. To the extent that it's a difficult pattern staring the bulls in the face right now, it is. Are they trying to engage? Always, guys. But just know the market sentiment when it's staring you in the face, and we've got some difficulty. And take advantage of those higher time frame ideals as we look at the pickup and push beyond what was nice here. Let's take a look at this 4 hourly real quickly on Bitcoin before we say adios. Where is our QKD Fire and Ice? Let's see this. Let's go to the hourly. Let's go to that phone call. We got a phone call. Nicely done. Looking at the engagement there, which is the 200 weekly moving average and that 4 hourly lower pro line. Not bad. What do we have concerning on Bitcoin? Something like a red cap line, capital control line, I guess. RSI, stochastic, and MACD telling us that at some point, whether or not the 20 moving average comes up or whether or not we go down, boom, we can expect, or at least we have a warning flare that we could have some contact with that 20 moving average. You got it right. Play the game long enough and you'll make this stuff look easy. You'll make it look easy. I'm telling you. easier than what you just made it look like with another pickup on the 200 weekly? I don't know, guys. I don't know if you can make it look easier than that, but that's nice work. Nice work. This is London with Bitcoin Spike and VIP Trader. I'm going to get going. We got some meetings incoming. Meetings here at HQ over the next couple of days. So I'm going to be doing that in addition to taking care of some dev work and just really looking forward to spending some time with you towards the weekend. And next week, we have a lot of good in this market left. A lot of good in this market left. Copy that. Roger that. We'll talk to you soon. This is London with Bitcoin Spike and VIP Trader.